So in this video, I'm going to tell you how I became instantly profitable with ICT. I will tell you a strategy. I will tell you what to focus on, but first I need to tell you a little secret. When I say that I became instantly profitable with ICT, that doesn't really mean that I was instantly profitable. Trader, it actually means that as soon as I started trying ICT, I became profitable, which are two very different things. I started trading ICT when I was 3.5 years into my trading journey. To put that into perspective, let's make a few calculations every single year. You see 48 candles playing out in the live market, which means that if I was trading for 3.5 years, I've seen 2,168 candles in the live market. And what I just told you is actually very, very important. These 2,168 candles actually are the reason why I became instantly profitable. The reason for that is because I have a lot of live market experience, and when you're learning ICT, I really need you to focus on that too. You start learning ICT, and I really need you to also look at the live market, not only theory on YouTube and whatever. It is actually going to the live market and apply what you're being told. See everything happening and developing in the live market. The mistakes in the live market. It can simply be on a demo account, but live market conditions and apply what you've learned. That is the biggest secret, and a lot of people fail. To do this, a lot of people think about riding a bike and they read a book about it, but they do not get on a bike and actually ride, fall, and come back stronger. Because people really have a misconception with ICT. So many people look at what he does and spin it in a bad light. And obviously a lot of people don't like him, but what I look into is the strategy, not the person. Whatever it is doesn't matter. And so I decided to put the work in with ICT slowly, but just like you. I got way too overrun with all of the information that was being provided in the 2022 mentorship core content, like Sniper series, Market Maker Primer series, like everything. It was really overwhelming. And I thought, I don't know if I want to implement all of this. And that's where I understood you don't implement everything. You don't now look at the markets and try to trade everything. What you're going to do is you're going to look at the 22 mentorship and you're going to look at the core content. And yes, watch all of the videos. And then you're going to notice that you're going to be presented with a lot of things. Optimal trade entry, which is a Fibonacci retracement, fair value gaps, order blocks, daily bias, power of 3, traders sentiment, treasuries, commitment of traders likes. Many things that you are presented to. Then I want you to pick 3 things, which I will tell you which ones, and I want you to study those very carefully. And that's only when you master these 3 things are you actually going to go into harder pieces of content. If I really want to be, because I'm going to be very honest, I don't like looking at commitment of traders. I don't like to look at seasonalities. I don't like to look at treasuries sometimes. I don't, but overall, I know what I'm looking for. And these are the 3 things: daily and weekly bias, power of 3, in foreign entry, fair value gaps, and order blocks. Those are the 3 things that I focus on. And it's funny because I see other people putting all sorts of spins into ICT, which again, I understand, and I just like to keep it simple. So in this video, we're going to put everything together and we're going to look at a strategy. This is the strategy that got me funded. This is a strategy that got me instantly profitable. And now we are going to jump on the charts and I will explain it to you. Okay, so now we're at the charts, and first I will explain to you the science of the entry, science, and then I will explain to you the entry. So there's 3 phases in the market. There is the manipulation phase, there is the expansion, and there is the distribution. With this, what I mean is that when you look at the candle, and this is what a candle looks like, this is exactly what you see. You see manipulation, the expansion, and you see the final distributions. So this is what a candle looks like in general. So every time that we're entering, you want to understand that this happens in every time frame, every session, every hour, every time this happens. And our goal, if we're going short, is to enter while the market is in the manipulation phase. Because this is what the market looks like when the candle starts off bullish and then goes back to entry, leaves the wick, and then starts expanding lower. This is what the market looks like at first. At first it looks bullish, right? When we know this and we're trying to approach the market. I want you guys to look at the daily candle. And this, I'm not talking about midnight of New York. I'm actually talking about the daily candle. It's easier for you to just look at the daily candle and see what that's doing instead of looking at things that are not at the chart and trying to piece them together. That's a little bit more advanced in my opinions. So what I do is when the day opens, I actually just put on Alaneth throughout the day. And let's say that the daily bias is bearish. Then my goal is to enter while the market is ranging above the open. So don't forget that this is the daily open, not for once again that the bias is bearish. So what you want to do is you want to enter as the market is moving up and you still think it's going down. And then once your session happens, let's say that you are trading New York. Once you have your session, you want to see a sweep of the high if you're bearish, followed by a market shift. And this is where you look for the order block. Let's write this down. So market shift, order block, and fair value gap. What I tell people in the simple trading edge is that sometimes you don't really need the fair value gap. This is not like the most important, but it's going to be lower probability. So what you would want to see is something like this. So this is something of what you want to see. A sweep of the highs market shift that happens right here. This is the market shift, and if you want to enter just on the order block, then you can enter here, and then you would have a precise entry that maybe doesn't pull back. But most of the time what you will notice is that price ends up coming back to the fair value gap plus the order block, and then price will move lower. So what are the most important concepts for you to have here? You need to know what the bias on the daily is. You need to understand power of 3, which I just explained. You want to enter in the manipulation phase of the markets, so that once the market keeps going lower, what will this candle look like? Well, let's think about it. This candle would look something like this. So where did you position yourself? You positioned yourself at the wick, and it took advantage of the expansion. So this is the premises on how it's looking to some entries. Okay, so right now let's run through the scenario. And basically this is where I'm going to tell you, you need to be careful with what you're trading this with. I can give you the best strategy possible. It probably works. It will work on most of the time frames, but I don't really recommend it on the 1 minute and on the 5 minute. The 5 minute is more acceptable. That's where I'm teaching right now. But if you're watching this, I would recommend you actually sticking to the 15 minutes. So let's look at the daily. What is the bias on the daily? Well, we can see that we have equal highs right there, which is not the best thing, but we also are bearish in general. We just flipped this very small fair value gap. But in general, I'm targeting these low. So these lows are next to target. Because ever since this market shift, I'm already bearish on the market. So I'm looking to target these lows, for example, and on the daily. Like that, I'm basically looking for targets for ways to enter short. So if I'm trying to enter in a position, I'm trying to enter in the part where the market starts moving up, and then I want to enter when the market reverses and goes bearish. But I want to catch this move. That's what's important. So if we got down on the 50 minute and we quickly add an indicator called daily, weekly, monthly, hopens, but we just keep it on the daily, it'll make it easier. You'll be able to see the power of 3, so right there. Okay, this is where the daily opens. So we want to see a move below, preferably below these lows. These are equal hours right there. That's quite a big move, but either way, if we can move lower than give you, say, market shift there, we can target the highs. So let's see how this develops. So we go for the highs, right? And this is why I tell you to not zoom in way too much. The reason for that is because if I go right now on the 1 minute, there has definitely already been a bearish market shift, right? And so you could take a trade short there on the 1 minute, but most of the time what will happen is that this is just going to continue moving up. You can see this has clearly bullish order flow. We're respecting this fair value gap boom, right? There, let's see what keeps happening. We keep respecting the fair value gap. We'll probably come back to this and we'll move higher, okay? This is definitely news. What was this 130? Yep, what happens after Web basically swept these highs, okay? That's good for our bearish thesis. We just reached this up close candle, saw that on the daily is really good. So let's look at TIF. There's going to be a market shift, which thus far has not. We want to see a market shift, right? There a fair value gap and an order block, okay? Okay, so this is the first market shift that you can really see. This is going to be the order block. So now, if you really want to, you can start looking for shorts in order to target these lows, because we've just hit every big higher time frame. It's going to be a bigger stop. But either way, what will it give you? 1.7. That's fine. Maybe we can get this 2.1 to 227 pip stops. So the entry is at the order block. You get tagged in, right? There are a little bit of drawdown, right? Or now you want to see another market shift. This is good, but you want to see candle closure below this. Let's see. Okay, so I've closed again. So if you want to wait for the order block and the fair value gap, you have this one right there, and this you'll have around. The same Verterwards 025, where's this low 1 to 2? Let's see if you get tagged in, and this not to forget. All of this is happening in the manipulation phase of the candle. If we go into the daily, you'll see that thus far, this is what the daily looks like, supin. Now the daily still looks like this with a wick at the top, so right? Now we're still looking for this bearish expansion, so let's see you get tagged in. Right there, WLS are down, and then price, does it go back to TP? No, doesn't got a TP at 1 to 1.7 the next day. Let's see if there's an entry on the next day. The price ranges around us. You can see price is ranging above the daily open boom. New York session comes along, which is here. Okay, so now our session is starting soon. What I don't like here is that you obviously don't have a nice sweep. This to me is just bullish overflows. So we want to see a sweep of this high because it's going to be a sweep of the London high. So okay, that's the sweep. Let's see if we can get to our reversal. Here, okay, that's not too bad. Next candle, okay. So now what do we have? We have sweep of the London session high. The set 2 just hit TP, so you can now enter in a new position to target these lows. That's a 1 to 2.31 order block right there. Fair value gap right there. Okay, get tagged in. You get their reaction out of the fair value gap. The first reaction, as you can see, came from the order block. If you want to enter on the order block, that's fine. The target is still this low. By the way, if you missed this entry, you have this one order block right there, and this all on the 15-minute. Let's not forget, so let's put this in another color, because we're already in one trade, and let's limit ourselves to untrade the same thing with this. Well, another trader right there. Again, there's a plethora when you have a big destination right here. You have a plethora of possibilities in terms of, okay, fair value. Gap order block, fair value. Gap order block, there's so many things, then price opens once again. Well, this was on Friday, so let's say you close it there, that's a 1 to 1.7 their way. Let's see if we just hit the target on the daily, because again, another big factor for our trades is the daily, and we just miss it, and then we target the daily. So I just gave you the possibility of 1, 2, 3, 4 trades, all of them, provide added around a 1 to 2. Which means that if I have an around 50-cent strike rate, you can easily be profitable with this. And so again, focus on the daily bias, focus on the power of 3, understand manipulation and understand expansion. And from there on, you'll be closer to success. So this is a simple ace it gets. I don't look for any other things, you saw it. I just focus on really 3 things, and that's where I execute, and yet still I was able to become profitable with ICT. Consistent, funded, everything you're wishing to be when you're learning ICT. If you keep it simple, if you just watch the 2022 mentorship at first, and then go on to the core content, and you also put the work in, you will be able to be profitable with ICT. That's all from me for today. If you like the content and want more of it, leave a thumbs up, write a comment, and subscribe to the channel. On my website, www.tradingtour.net, you will find free ebooks that will teach you how to navigate the financial markets and make a profit regularly. See you soon.